Hey guys, what's up today?
Hello. All right. Hey, thanks, Scott. Hey, everybody. Hello, Andy.
Hello, Steve. Hi, Scott. And hi, friends.
Hi, hi, hi. All the pleasantries aside. So, Andy's going to man the questions panel. Comments coming up. And if there's anything Andy can answer in text fashion, he'll do so. If not, I'll demonstrate it if need be. But thanks for tuning in to the Trade of the Week. We do this every Tuesday at 5 Eastern. Quick reminder before we get into it, we're not brokers, we're not money managers, registered investment advisors. We're just a few derelicts who like to use this really cool software and show you a few things here about this software as a subscription service known as Trade Ideas. So anything you see or hear, please do not construe it as financial advice or investment advice. You got to seek out your person of whatever you want to call it, licenses to do that for you. A vibrant community of traders. This slide is always here to remind people that we have a very in-depth product. It's 14, 15 years old now, and it's not something you can learn in just a few days. I can honestly tell you that. And so some of the ways we help, primarily the slide over here, Learn to Profit. This is a screenshot from Barry Anderson's live trading room. Typically, there's about 500 people in there every day with a handful of really good traders that kind of take the lead. Barry as well helps answer questions about the markets, about the product, and how to do things and demonstrate. So if you're not in that room and you're looking for something like that, you need to get in there, and you can sign up right on the front homepage of our website near the top, free live trading room. And free was the operative word I just dropped there because there's a lot of good content in there, and it's giving a lot of paid rooms a pretty good run for their money. I don't think they like us getting the word out. They're charging people 80 bucks a month for a similar type chat room or live trading room, as Barry likes to refer it as. So beyond that, we've got the afternoon webinars, typically Monday through Thursday, 5 p.m. Eastern webinars. This is my slot on Tuesdays. We'll have one tomorrow with Dan and Brad and Jamie and Andy on Thursday. And then every Friday, this is the best for newer users if you're going to listen up. The best place to come and pull up a chair and get help is the Friday support sessions from 11 to 2 while the market's running on Fridays. So we don't have other webinars set that day, but we set 3 hours aside for you guys to come in and as a group show us what you want to see or need help with or configure. We always have a good attendance and a lot of good support. Even if you're not asking questions, you can learn through osmosis, most definitely. And then lastly, what we do to help around here is the Trade Ideas University, Monday through Thursday, starting with the 101 classes on Monday and finishing up with the 401 classes on Thursday. And we have a free ability to come in and do that. We also have what I meant to say was a playlist of a YouTube playlist that if you need to see, you can request it and we can drop that. It's all 4 hours, excuse me, all 4 days. It's about 6 hours of content. So all that together is a pretty good concierge effort on our part to try and get people up to speed as quickly as possible. All right. So just looking at a couple comments there. Yes, thank you, Waleed. I see David and friend. All right. Yes, we got another award. Correct, friend. More to come on that, I'm sure. Do you recommend TI for day trading? Oh, yes, Andrew, without a doubt. So back to the slideshow here, man and machine combined. This is my theme every week to remind people the brave new world we're going to be entering into is not where we sit back and we are slave to the machines doing everything for us. No. Machines and human and artificial intelligence and machine learning, they're going to be a great complement to us going forward. So a lot of jobs that might have been mundane can now be done by AI and monitored and curated. And that's the key word, monitored and curated and supervised by humans. And Paul Tudor Jones, a great money manager, hedge fund trader, has this quote that no man is better than a machine, no machine is better than a human with a machine. So the human with the machine is much better than somebody who's just sitting back and using the machine for everything and not kind of combining the human element and the machine curated element. I've used many examples, whether it's online fantasy football or oncology departments using Watson, IBM, smart AI helping them solve cancer. The researchers are still doing the decision making in the job, but the AI is presenting them a much more quality data set. So with that in mind and that theme, that's what Trade Ideas does. Whether you're looking to create your own custom scan like Andrew just asked about to find what you're looking for in a day trade capacity, or you're looking to slow things down with a swing trading scan called a top list that gives us slower paced ideas. All this is there for you to work together with the machine to get what you want and curate, 8,000 stock symbols every day. It's a lot to choose from. So using our system to bring it all together, whether it's the custom scans that you build or the new flagship product, the AI, which is helping curate and give people some ideas in real time, which we'll discuss a little bit coming up here with Andy. So all that said, today's agenda here, we'll go through the market recap of where we are, through the AI Holly recap. It was kind of a quiet day for AI. The trade of the week, which this webinar is themed after, we will talk about. It unfortunately, well, the good news and bad news. The good news is it went like crazy today. The bad news is it gapped up, and probably a lot of people were timid on that. So we'll explore that scenario as well. I wanted to add a little bit more content to today's presentation, so I came up with something that people sometimes come in and ask about and they're not aware of, and it's a pretty cool little setting. So I'll demonstrate the pre-market high filter setting and how you can identify a high in the regular session, taking out the pre-market high. There's a little bit of involved settings there. We'll take a look at the sectors like we did last week, and we'll probably set a few more alerts like we did last week. So let's go ahead and minimize that. And here we are. Let's move over to the S&P 500 for market recap for the most part. And I've got my handy dandy pen. So we've been talking ad nauseum the last couple of weeks about this looming 200-day moving average, and we hit it. And last week we said, well, we're going to challenge it. It just seems to be the fait accompli. And when we challenge it, what the bulls want to see is what we kind of got here. The last couple of days, we have a couple of closes now, and we can include this one too. We got 3 closes above this 200-day moving average, and that's slowly chipping away at the bear narrative that we were in correction mode and ready to roll back over. This market has literally gone through every single gate of resistance that we've been watching, pivot lines back here, bouncing off support lines, and now the final frontier. We got through the 200-day moving average, and there really isn't much technically above that to look at. We could probably draw a resistance line going back here. I will definitely do that. Oops, there we go. So that horizontal line is now corresponding to these 2 periods where we were briefly above the 200-day in the past. NASDAQ's not looking so hot. I shouldn't say that. It's not looking as good, because it's getting caught up here. It's getting caught up in the web of the 200-day, and couldn't close that day. And technically speaking, we actually did close above the 200-day moving average here in the NASDAQ today. But when we look at it relative to the S&P, it's still lagging a little bit. It's definitely lagging in relation to the Dow, DIA ETF, where this one, we talked last week about how it did exactly what we wanted, broke through resistance, came back and tested resistance, which then became support, and then many, many closes moving higher. It's actually following the 10-period moving average now. This Dow ETF is really performing well, and what I mean is the next test was right there. It's bouncing off its momentum line. The 10-period moving average now has a hold of the Dow, and the moving average is 10 is above the 20, and so on. And then lastly, I think when we look at the IWM, it's still kind of lagging, hasn't gotten to its respective 20-day, 200-day moving average yet. We'll probably get there and peck on it and see what happens. But I think for the most part, we all want to agree that the S&P 500 and the NASDAQ need to move together in unison and get above this 200-day moving average. Yeah, I might even put in a future pivot line up there as we get closer to that. So again, a lot of the stocks that we kind of marked up last week have just been a slow sideways grind. It's been kind of difficult to find a lot of stuff performing well. There's still stuff out there that is popping off the charts, and we can use Trade Ideas technology to find those. But the focus here, again, is the bigger picture. I know what I wanted to add. There was 2 things I wanted to add. One, I noticed Andy was playing around with Apple a little bit in the Brokerage Plus testing we were doing, and I brought it up, and whoa, look at that. The 200-day moving average for Apple is nowhere in sight. We've got a long way to go before we get up to that level. where we've been kind of comparing all other instruments to its respective 200-day. And so I think this is something we need to watch. If Apple loses its footing here, the NASDAQ is gonna cough. And as we saw earlier, the NASDAQ is not exactly as strong as the Dow and the S&P are at this moment. They're more technology weighted, where the Dow and the S&P are more energy, finance, and transport weighted. And the other thing I found kind of interesting, and Andy and I both agreed, is that we've got the S&P looking pretty good, and everything's kind of moving higher, but the defensive stuff like gold broke out today, the actual commodity gold. That's kind of conflicting, interesting, and I would also expect to start to see the treasuries, the bonds, start to maybe break this little mini trend and start to roll over and show that they are no longer providing the safe haven. So what I'm saying is here, the S&P is kind of giving us conflicting signals in that it looks like the price action is moving higher and through all of its pitfalls and traps. But at the same time, I think we would expect to see some of the more defensive stuff that has been strong start to falter. And gold did nothing but like falter today. And same with the gold miners, which we'll talk about later. So gold miners, gold, defensive stocks, the Treasury ETF is not showing signs of wanting to roll over yet. So it's kind of a game of chicken at the moment. Which one is going to blink first, the market or the defensive stuff? And so that's kind of all I really have, Andy, unless you want to add anything.
No, you hit it. You pretty much covered it very well. But you're right. The Q's not looking as healthy as the other averages, your industrial average, and of course the SPY, which I think is probably the most fairly weighted. But yeah, you got to look at Apple. Apple's kind of bringing up the rear, and really, if you look at them all, take a quick look at like Facebook's and Amazon's. They're not, well, Facebook's a little bit different story because they did have earnings a while back, but still a long ways away from their 52-week high. And then Amazon, of course, it's nowhere near its 52-week high. So really, your big tech giants are not really performing like you're seeing the spiders in the Dow. So yeah, it'd be interesting to see if we can continue to move forward without their participation. It's gonna be hard to do.
Yep, exactly. All right, so we all caught up on questions and everything.
Okay, let me.
What is the VUG? I'm not quite sure what the VUG is. Somebody's asking. We better take a look and see. So this is Vanguard Growth. It looks just like the S&P. It looks like a mirror of the S&P. So whatever I said about the S&P, Oleg, goes the same for that. Would you share the sector ETF, Thomas? That's a great question. Thomas is asking, and we're going to go through this one a little bit later too, Thomas. It's part of the curriculum today. This is the sector ETF top list. What I want to tell you is the basics are available down here in channel 4. You can go there and grab the palette, and on that channel 4 you can right click and save this to cloud, and then it'll be in your cloud. So you'll have the shell at least as the shell, but you're going to still need the 30 ETFs that I'm using in there. And the way the shell is built out, you can use that company name as kind of a cheat sheet, but it's there for you. You can grab it. Now, to get the 30 ETFs, I mean, you can freeze frame here and type them in yourself, or we have a PDF that if you want to email info@trade-ideas.com, we can send you that PDF that shows you how to do the symbol list on all those. Downturn in spiders soon. I don't know, Oleg. We'll see. As long as this 200-day moving average keeps holding, I think we're going to be okay, but it's still too early to tell. We need confirmation from the NASDAQ, like Andy was just saying.
And sorry, Thomas, I noticed I wrote that in the wrong answer space, but I'm telling you where to send that info for your Channel 4 document page. Hopefully you see it in there.
Yeah, it's a PDF we can give, and it's got the
it has all of them in there.
The 31 ETFs on there. All right, so that is our first segment, market recap. Steady as she goes. Things are grinding and slogging higher, and each little gate and resistance level that's put in front of the price action, the market seems to slowly gobble it up, absorb it, pull back, fill a little bit, base, and keep moving higher. So until that changes, that's where we are. So the next up is the AI Holly and kind of what happened over there. Oh, shit, I didn't mean to do that. What happened over there today, but I'll transfer the desktop to Andy, or he can take it and talk about what he's seeing.
Sure. All right, let's pull up my. All right, let me just go ahead and expand this a little bit so you guys can see a little bit more of the Holly instead of all my custom alerts in here. And I always like to pull up the spiders, just kind of see what she had to work with today. And you can see a little, I mean, a nice little, like Steve was saying, you know, chugging and drifting higher, but then an ugly little sell-off there in the day on a pretty good volume candle. I'm not sure there was anything to that, but you know, something to keep an eye out on for tomorrow morning anyway. But so if you look on the daily chart, you can see, you know, not a lot of moving, and there's kind of just the kind of grinding and chugging. We've seen this price action a lot, you know, over the last 10 years. I remember when I was an avid day trader for 17 years, I remember this is the price action that can really be frustrating when you're trying to get movement and there's just no volume. It's a great thing about trade ideas. We can give you things to trade where you can find the volume, and it's definitely out there. As a matter of fact, Holly had one today, and Riot. If you look in Holly Grail, had a beautiful call in Riot, and look at the 15-minute chart. You can see right here a move higher, and then the sideways action, a nice little channeling, and then popping right out of that, breaking that high. And there's the call in Holly, and Holly got out quickly, but then, boy, you had some nice run after that. I know Barry was in the marketing meeting talking about the room. A lot of people caught that. And much like the market, this thing sold off hard. You can see the big tail there at the end of the day. Overall, in Holly, Holly Grail, I thought had a pretty good day. I always love it when there's no stop outs. Okay, risk on. I mean, risk off was good. I always love it when risk off performs well, and you can see that was actually the best profit today. Risk off actually beat risk on, and when I see this kind of price action in the spiders, it doesn't it doesn't surprise me a whole lot. Holly Neo, haven't seen this in a while. No trades today. And then Holly 2.0 risk on was down 0.41. Not a whole lot going on there. Actually, not all that great of a day at all. It was actually a couple of stop outs in that one. We'll pull that up real quick. Even number of shorts and longs. So 2.0 was just not a great day. You know, 3 stop outs and not a great day, but just the opposite for Holly Grail. And I noticed lately, Holly's been, you know, with Steve mentioning this kind of grinding and chugging action, you know, and I just have the feeling, for whatever reason, we're extremely overbought after a big move. We've tried to pull back some, but, you know, not really. A little pullback there, a little pullback there. So we are still way overbought and chugging higher. And I'm really thinking it's for some reason, guys, remember, it is artificial intelligence. We feed it base strategies, but the base strategies we feed it, they always have some sort of configuration, and in most cases it's built on a daily pattern, not just an intraday action. We're looking for daily pattern setups, and you know, I think occasionally I've noticed Holly, when you get these kind of overextended or oversold, it just needs to be reset. And what I mean by that, the need a good healthy pullback, maybe 2 or 3 days. Let the dailies kind of come back in some sort of formation and just kind of reset. I'm not making excuses for Holly. I don't have to make excuses. It's like I said, it wasn't a great day in the market. I mean, it was good for a while, but sold off there. When I look at movement like I'm seeing over here in the spiders and, you know, short little stubby green, you know, spaces, those are not great trading days. But, you know, I thought Holly Grail did really well today. But I'm referring mostly to the...
I love that short little stubby.
Yeah. But
just struck me as funny. I'm sorry.
Yeah. Now when I think about it, it's kind of funny. little stubby bodies, man. But Waleed has a question here. Okay, he says not an urgent question, so I'll circle back around. But I mentioned Riot. I thought there were a couple of good calls today in by risk off, and take a look. And this was a nice little buy on a strategy called Tailwind. It's AXXN. You can see there on the pullback. All right, there's our pullback. Probably, I think right there was kind of going sideways. Nice little buy. You can see not a whole lot of pain, maybe 10 cents. Did not get anywhere near the stop. And then a nice little pop up out of that. Nice little trade there. Taking what she can get and exiting, and then it sold off there. It's pretty much the same for all these. Like I said, there's another one, another same strategy, tailwind, nice entry, not a lot of pain at all, and nice little pop. She sold it there. There was a little, more if you, got out earlier. But Yeti was float on, got out at the right time on Yeti. They had risk on, sold off. Same thing with Riot. Okay. Same thing with this label on float on. So they lasted for a little bit and then they sold off. It just tells me. And I noticed my strategies over in Brokerage Plus, both long and short, they weren't doing, same kind of problem. There just wasn't any kind of drive in any single direction. I felt like in any of my stocks, and it was just, I don't know, just kind of a quirky day. I'm hoping for, and I think it's probably soon to come. Just for a good healthy pullback, not a huge sell-off, because I never mind those anyway, but at least a pullback,
a shower,
3-4%, just a good old shower to kind of reset things. And I think that's what Holly needs too, so we'll keep an eye out for that.
Holly needs a shower.
Yeah, Holly needs a shower. All right, Steve, I'm going to pass it back to you. That's really all I have to say about Holly today. Gorilla, I thought, performed just fine.
Sure. Bring it on back. There it is. Catch the ball.
Mm-hmm.
All right. Well, welcome back. I think this is the portion where we go and talk about the trade of the week. Okay. So there wasn't a whole lot jumping off the scans that we normally look at, and not to mention we've kind of just been going the same well in a lot of scans week after week, except for the Schwab one we'll catch up with here in a second. I've got some further thoughts later in the broadcast on some of those setups working. If we can't get a good grind sideways to work, we might have to look for the pullbacks that are having their respective showers, but I'm getting ahead of myself. So what we saw going into the weekend with Gold Miners Junior was this right here. And I think we even had, let's see, 1, 2, 3, 4, back here when we did our sector glance, which we're going to do today. We'll do again today. We did it last week, and I said, these gold miners are really holding up. And then as the week progressed, nice green candle here, and then this was the breakaway candle. So, I mean, what we have is just a really nice flag pattern on a stock, an ETF that is, that's been trending higher. I can't do that. It's going to unresolve that. So I'm going to go back and say, when we have a stock trending higher and it takes a breather and congests, call that a flag pattern. And so as of Friday, GDX was clearly breaking out of this flag pattern, has been showing incredible strength, way above its 200-day moving average. So since we didn't see a whole lot else to see that popped out on us in individual names, and since we're still in the throngs of earnings season and a lot of stocks that might have interesting setups have earnings coming in 2 or 3 days, we're not going to do that to you. That doesn't serve any purpose. There's never really a good reason, in my opinion and Andy's, to roll the dice and go into a stock hoping that the earnings surprise is going to give you a profit. Because more often than not, the trading gods frown on that, and it never really seems to work out. So the point being is we found an ETF sector that was really holding up well. And then when we go back and zoom out one more day here, okay, obviously we were on the right track. However, it makes it kind of difficult, and I get it, when stocks gap up. This GDXJ could have just as easily came in and filled the gap and gave everybody a wonderful entry, kind of like where we called it around 33.01, but it didn't. And we never really know what's going to happen. Are they going to gap and go, or are they going to gap and crap? And so in this case, I can only golf clap and applaud the people who did grab some, at least maybe pre-market, and saw it was going to gap up, and had the conviction to go ahead and take this trade. The other thing that stands out to me is, once again, the intraday stuff, the intraday action. When stocks are in motion, in momentum, they are looking at the 10-period moving average. So we had 2 instances here on today's intraday pretty much where the 10 period kept the price action in play. So if you were somebody that purchased on the open, maybe you got a little antsy and you saw this coming up here and you're like, oh man, this could easily pull back, but we're at that 10 period moving average that I like to talk about a lot. Maybe we sell half right there, you know, and use that line to kind of lean on and have some confidence that we can sell half and maybe let the other half run a little bit. But again, I'm not going to pretend it's not easy when a stock gaps up, especially one that we've had on our watch list and we've been rubbing our hands waiting, you know, for the market to open so we can trade this thing, because we've been stung before. You know, if you chase a few of these, it's just a matter of time before one of these stocks open and we get a gap and crap, and you're like, well, why the hell did I buy the gap? So I'm here to tell you there's no hard, fast rule of when to buy the gap and when to hope and wait it's going to pull back. We just don't know. But nonetheless, that was a very strong pattern. That's what we're basing it on. You know, I don't care about what Peter Schiff thinks about gold or what other people think about gold. The footprints in the sand were telling us here that breakout on Friday was significant and a lot of nice follow through today. Unfortunately, the gap made it a little tricky for a lot of people, I'm sure. Checking back to the last one, trade of the week was Schwab, and what I was getting at earlier was instead of trying to buy breakouts or follow-throughs, we had done 5 or 6 weeks prior. A lot of those stocks are still just kind of going sideways. We'll check in on them, but again, this signal candle back here, this nice washout bounce down to the 50 moving average and filling that gap, that was a sweetie, and gave a little bit of pullback. But in the swing trading realm, you can't let these types of days freak you out and wig you out. Okay, your out is down here. We're still up here. You got to let these things wiggle back and forth, throw some elbows and breathe, because you'd be killing yourself if you freaked out on that one. Swing trading is trying to let these things move in the right direction until they signal to us with their price action that it's not working. And you know, that was no fun, I'm sure, for people to take that pullback, but in hindsight it was still a higher low and it was still moving higher. I also wanted to check in on SNV because that's one that's not been really grinding sideways. SNV has been kind of moving out, and this was the trade of the week, I think, from 3 weeks ago. So, and then checking in on this one, once again, using that 10-period moving average as the guiding hand. Now we're getting a little bit of space. We're getting too far ahead of ourselves. So, you know, let's look left on this thing. It might be a reason to start taking some profits. Well, boy, it sure cleared some levels there. It's got a gap to fill. Actually, not a gap. There's a wick back there. So, you know, this is the kind of move where you start maybe taking a third off the table if you can, but still really nice trending higher with that guiding. Now, some of the ones that haven't worked out as well because the sideways grind was IBB. Well, it dumped a few people out back here, I'm sure, but moved right back higher again. So that was kind of tricky. I'm trying to think of some of the other ones we've had recently. I guess Oxy grinding sideways, peeking its head out, pulling it back. So in that respect, when we do some marking up of charts a little bit later, I've got a couple more that kind of are similar to that Schwab chart, and maybe we can find a couple of swing trades going forward. But back to the theme of this segment, the GDXJ did exactly what we hoped it would do. It just would have been nicer if it gave us a little bit more or less of a gap to participate. But nonetheless, when we look at our sector ETF board, out of all the ETFs, that was the one. That was the golden child. Is it going to be like that tomorrow? Probably not. Andy and I have a theory that a lot of momentum moves on the daily charts last about a day and a half, and if we call this one the day move, tomorrow wouldn't be surprised to see maybe some follow through and then some profit taking. So if you're in this, don't get too greedy. It's getting a bit ahead of itself because it had a great day today. Mm-hmm. Anything you want to add?
No, that's it's great. It's hard. It's hard to chase those kind of gaps, but man, if you did, it sure worked. And I'm not afraid of those kind of gaps, but I know some people are because it just all that is. It just shows what kind of strength there is there. You know.
Here's what I would have liked to have seen, Andy. It would have been a perfect scenario. I'll get my pen out again. So we open up here, and then let's just say we kind of tick down and then kind of go sideways to my old favorite spot right there. That would have been a 100% confident money entry all day long. Sure, you've still given up a little bit of this gap, but at least it gave us a little bit of a signal as to what it might want to do on the open. A lot of these times when these gappers come in a little bit, as soon as they hit that line, it starts to force the issue higher. And I've shown so many examples over the past weeks and months of that particular setup. So that would have been the perfect scenario, but we never ever really get what we really truly want, do we?
Nope. And I want to stay on this right here because Waleed asked a question. You know, he was asking about swing trading and what do we use as far as what do we look for and parameters and things like that. Yeah. And this goes back to how momentum can be a great start of a swing trade. And I know everybody likes to catch them early. I mean, I love catching pullbacks, but at the same time, when you get an explosive move like that and you can get it, pretty early in the morning. I'm not saying go buying the high today, but if you're watching it, you're seeing the volume coming in. You see it's the highest sector on the board, and then you look and you see it's kind of breaking out on a daily time frame. Nowhere near its all-time highs, but at least it's breaking a multi-month high. Yeah, that could be the start of a big mood, Waleed. And zoom out. Let's see where we do run into trouble on this one. Yeah, well. Looks like we are kind of sitting at that right now. Yeah, it could be above this, and boy, you could go up to around looks like 36 or 37. So
this is why we have the
target.
Big. This is why we have the target at 35, because that very first hiccup back there on the chart is going to be around 35, right about there. There's your 35 level, roughly.
This could be a big, nice little possible turnaround candidate on the daily there.
I'm going to kind of mark up. I used a round number just to kind of keep it simple, but that's where I think this thing could be heading in the near future.
Yep.
All right, so we're good there. Okay, so let's zoom back in. We talked about the trade of the week and some of the others and how they're doing. Let's catch up with maybe what we did last week. We'll do that last. What we're going to do now, I want to go into the popular pre-market filter. So I've seen this come a lot. We see it on the Friday support session sometimes, or it comes into our info email, or even maybe on the live chat. Somebody would like to know, and it's a pretty cool, it's a valid strategy, let's say, for momentum traders, especially ones that are watching the action in the pre-market. Okay, so sometimes people will say, well, how can I know when a stock in the regular market has taken out the pre-market high? Because a new high in the regular market pre-high is not going to look at that. But we do have a filter that could qualify that, and I was kind of looking for an example. I went through a lot of the extreme volume trades that come through this momentum scanner, and I found one that had the right setup for the intraday versus pre-market. So I'm going to go now, I'm going to put on pre-market, and I'm going to switch time frame a little bit so we can see a little bit better what's happening. I'm going to go to 5 minutes. Look at that. Interesting. All right. Okay, so now pre-market is everything in the color area, and this candle right there, I'm going to tell you, is a high of 1711. So this is our pre-market high in KTOS. Mind you, speaking on the heels of what Andy was just talking about with Waleed, look at this chart as well. Not a bad looking chart. No, coming out of a nice pullback, gap fill, and today it's had its day. Well, if people maybe were watching this, and this will probably be more applicable on news stocks, where things are going crazy in the pre-market and they're setting their pre-market high and their pre-market low range. Well, in this case, we've identified that candle right there, a little bit of activity at 1711 before the market opened. Okay, well then here is our first opening candle at 9:30. We opened at 1705, traded down under 17. And then the next 5-minute candle started to draw and then slowly approached. We would like to know, or a trader has asked many times, traders said, how can I know when the price in the regular session gets right back here, tucked up under maybe a penny below, taking out the pre-market high? So this is one of those cases where we can kind of use trade ideas to anticipate. Because we know what the pre-market high is, we can use the filter that we want to use here for an early warning system. So let's go into an alert window and show how we would do that. I'll just go from scratch. We'll do a new high is our alert. And in the window specific filters, we're looking for one called pre-market high. Distance below pre-market high expressed in dollars and cents. Let's add that filter. So we'll do a little bit of cleanup work here. We'll do the price, $5 minimum, 200 maximum, etc. The kind of stuff you always want to do. The average daily volume. Go ahead and put in say 250,000 shares. That's assuming that one does that, because we're going to reverse engineer it. Now, so new high on stocks at 5 to 200. Any other filter you want is fine. Volume filters you can add, but here is the kicker. So below pre-market high, it's in pennies. What if I put 0.2 cents? Let's check our work. The filter says the stock is at least 2 cents below, there's our operative word, below today's pre-market high. So in reality, this probably should have signaled around 1710 or 1711 using this setup. So let's launch this. But before we do that, there'll be too much stuff coming through. This is a great test mode. If you guys are testing something and you want to isolate a single symbol, immediately go to the symbol list and change it to single symbol. We'll put in KTOS. And yeah, I haven't tried this. I'm really hoping it works.
Well,
and
don't know why it wouldn't.
Oh, edit me. It's called edit me, and let's see a history of today.
Nothing.
Nothing came through for KTOS. Interesting. Why would that be?
What filters are you using?
5 to 200. The moving average filter might be bad. Let's get rid of it. No, that should be fine. We'll do this. This is what happens when you don't do it first. You can get rid of that. Click hide unused. And that's all we got. Symbol list, KTOS. There it is. Right at 6:30. Yep. Okay, so here it is, 1708. So it was getting close. It made a new high at 1708. It was really, really close. So this is really the first occurrence, I think, that we would see. Okay, so pretty much as it was getting close, let's change this filter just a skosh and see if that adjusts as well. Change it to 0.01 penny below the pre-market high. Let's see if this comes out. It came out a little bit later, 2 minutes later. So there it is at 1709. So if you can see the wisdom in what we're trying to do here, identifying a pre-market, and again, this works much better on stocks that have a lot of pre-market activity, where the traders are setting a pre-market high and a pre-market low range before the regular session even starts. So this was just an example off the top of my head that I could find. It was a decent daily chart that had some trading prior and then opened up below, and then in the regular session actually took out that pre-market high. Our new high would have come through sooner, but that filter that we're using, and this is the whole takeaway from this thing, is below pre-market high. So sometimes a lot of people like to use that filter to really qualify when they want to start looking at new highs throughout the day. All right, so hopefully that makes sense. Looks like it does. Let's see, the question from Leslie on trading starts tomorrow. You'll need an updated version of Trade Ideas. As long as you have a version of Trade Ideas and you have a premium subscription, you'll see tomorrow's AI start from scratch and see if we can glean some good ideas tomorrow on directional bias and maybe some trades as well. So again, just a quick reminder on how to throw something together, how to talk it out, find the filters, find the event, isolate the symbol you're trying to find, as an example, using the symbol list and a single symbol, and then you can release it to go to all symbols. And of course, there was a lot of stuff I'm sure that was coming out today on that particular setting. All right. Moving on. I'm going to close that, relocate that. So last week, I believe we set some price alerts. And again, let's save the price alerts for last. Let's just look at the sector glance real quick. And usually when we do this, we can find 2 or 3 sectors that we need to keep an eye on tomorrow. Same thing, and identifying the GDX trade, GDXJ trade. It's just a matter of going through them. So I'm going to give myself a bigger zoom out, and the nice thing about these T windows is you can start to use the arrows. All right, so solar, that's looking pretty interesting, Andy. I think that's notable. Look at how it's riding that 10-period moving average, everybody. It's way above its declining 200. Very notable. Solar, I like solar. by way of the TAN ETF. GDX is the same, gold is the same. Here's our financials. Interesting. Been above the 200, been below the 200, back above, and now kind of flagging. That's kind of interesting too. Let's see how the banks look in relation. Forget natural gas. For those that want to trust China stocks, there you go. Silver also having kind of a move with gold and obviously the precious metals today. Now here's what I wanted to see: the banks, the regional. Yeah, these are trending higher, but they're coming right into that 200-day moving average. So they're still below their respective 200-day, which we've really been able to gauge a lot of instruments and a lot of sectors on. So healthy, but not really looking like it's a breakout. Not so much as TAN. TAN looks a lot more breakout to me. And yeah. All right, so down to oil. Oil, big volume bar today in the oil service sector. OIHs, it's been grinding sideways like that OXY we talked about a minute ago with the prior trade of the week last month. But look, it's slowly creeping, it's sticking its little turtle head out from its shell here. I think that might be interesting as well. So not only is solar interesting, but oil service is interesting. The commodity of oil is also looking the same. Here's the broker dealer. Now this is where Schwab could come in again and have some further upside. Some further upside in Schwab could be the case when we look at the sector. Also kind of turtle heading and peeking its head out of a nice long sideways range. So that's kind of interesting. Let's see what else we can find today on this chart. Retail, not bad. Slowly the train's leaving the station out of the long channel. So we're getting some resolutions on some of these sectors bit by bit. Semis have had a nice run. They look like they're ready for a pullback. Airlines, take it for what you're worth. Steel just keeps firing higher. It's above its 200-day now and grinding higher, but running into major resistance here. So prior support back here is now major resistance in steel. Probably going to need some pullbacks on that. Excuse me, that was home builders. My bad. Not steel. Home builders are running right into major pivot line. Super support back here that broke, and now we're back knocking on the door, and I fully expect some supply to possibly cap that. So I wouldn't be looking for, I'd be surprised, let's say, if it pushed through without a big pullback first. There's our steel, yeah, range bound. The IWM, we looked at that. Treasuries, we looked at that, holding up. Energy's kind of creeping higher. Technology still has got something to prove. Here's the financials again, XLF. I'm sorry, FXI was earlier, that was China. So the XLF, the financials are kind of creeping their head out, but they're going to run into some major resistance up here as well. The REITs have had a really nice run, bouncing off that 10-day moving average, moving higher. Boy, these REITs are strong, really strong. But I'm not saying they're setting up really nicely here. This kind of comes into the REITs look like they're ready for a shower, like we were talking about earlier. REITs were really interesting back here with a nice sideways move and then a pop off that. It's been a long road, so I don't know about that one. And we're nearing the end here. I'll recap what I liked. That's moving higher, but probably ready for a pullback in healthcare. Nothing. And then we looked at the IVB. That's pulling back as well. So it looks like, for me, solar is an interesting chart. So if you see some solar names tomorrow, maybe pay attention. Some oil service sectors, if you see some of those names tomorrow, maybe pay attention. They're trying to break out. Same with the broker dealers, are possibly early, very early, just peeking its head. But I think the XRT was looking pretty good as well, the retail, giving us at least a couple days. So nice slow slog out of that sideways action. So, again, solar, oil service, broker dealers, and retail. Maybe keep that on your watch list for tomorrow. If you see something that looks interesting and fits the bill of one of those sectors, you might have a little extra confidence in your discretionary decision making. So lastly, let's check in with what we gave out last week. And again, it's nothing to write home about, nothing really at all. Just a lot of sideways action, quite honestly. We'll look at them one by one. NEO had a good day today, but these were the ones that were given out last week. INAP had a nice push last week. A grind higher and switch following the moving average. Again, we handed these out last week, and we're going to do the same here. staying in the range bound there, and then we're going to start to get in the ones that aren't doing anything. They're just grinding sideways, making people miserable. All right, so I've already got a couple identified. I'm going to delete these 9, and we're going to start fresh. And then beyond that, I'm just going to kind of look at them for the first time. As I had mentioned earlier, I wanted to kind of maybe focus on that Schwab setup, something that has a nice pullback and a nice bouncing bottoming tail. And 2 of them were found on, well, let's see, the 3-day bounce. I think that's one of them. Yeah. And this one, washout bounce. So we're going to start with this peg. It will come back to you. Peg. Nice looking daily. Really faked out the sell-off. Big volume bar, spiked it right back up. This thing, I'm going to go back to 15 minutes. Sorry, guys. This thing might be ready. That's a really nice washout bounce on the open.
I'm just curious if that's a REIT. I don't know.
Electric power and transmission. So it's part of the XLE.
Yeah. Okay.
XLE didn't look bad.
Same family though. It's kind of a dividend paying stock, but no, yeah, it's definitely a washout bounce.
So what we're going to do in this peg is look at today as 3 days in one. A really nice washout on the open. Probably a lot of stops were run, and when we see that on the open, and then the price gravitates back towards the close, towards highs at the close, there could be some follow through. So I'm going to look at yesterday's high, and we'll just say if there's a follow through off of today's candle. We'll go 56.46. And that's bottoming tail interest number 1. Bottoming tail number 2 is off called the 3-day tail that I have. Here's, again, everything kind of lining up. This thing was sideways, driving everybody nuts. It popped above, closed above, did exactly what we've been talking about the whole time, using that breakout of the 200 resistance to become a soft landing support level. Today was a nice soft landing support level, a beautiful bottoming tail wick through there and bouncing back up. This thing seems to have reset, had a nice 3-day pullback and might be ready. I'm going to put it above today's highs for possible follow through, 53.40. Trend play, 3-day pullback with the tail. I didn't spell trend right, but just so you can see, we can edit price alert and we can fix our spelling errors. All right, so now I haven't really seen what's coming next. I'm going to move to some of the ones I've been looking at recently. Downward trend breaks with a lot of short float. Too many green candles in a row, not going to chase that. OSTK, nice day, but probably expended a lot of energy today. I'm looking for stuff going sideways under significant levels that might have not a lot of energy expended. And I'm not really seeing. This one might be interesting. I call this the trains left the station. So we had a really nice 2-day move, and we can't even get a pullback. It's almost like it's an upward pointing pennant. And Andy knows what I'm talking about. We've seen these things go before. It's like, before you know it, it's like, is anybody looking? Is anybody looking? Is anybody? I'm gone before you even know what happened. So that's kind of what I'm thinking is going to happen here. I'm going to mark this one up because I've seen this look before. And we're going to do it above these 3 days. What's that? 54, 53, and 53. So we're going to go to 55. And we'll call this one is the train leaving the station? Question mark, because we don't know. All right, that was INAP. What else we got on here? Anything interesting? Howard's already had its move there. It's already had its move. Rejected move today. Consolidating. Had its move. Big move today. Oh, this is kind of interesting. Long, tight range.
That is.
Kind of peeking its head up, but we have the ominous declining 50-day moving average coming right up to meet it. But still, let's just have some fun and see if we could catch something before it goes. The high of that is 31. The high of today was 25, so we'll go 32. Long consolidation break out. G, no. Getting to the bottom of the barrel down here, so I'm probably going to switch to the one last scan. That one's not bad. PDCO. Getting above its 200. Could have some follow through tomorrow. I'm not going to mark that up, but it's honorable mention. Would have been nice to catch at least today's move.
Yep.
Yeah. Let's finish with Star. Really, really tight wedge that's breaking out of here. That's what I'm seeing right there. So let's mark this one up, and then we'll move to the comp rating. Let's give this one the high of the spec here. So we'll go high. 981 is going to be our strike price. Perfect. Nailed it.
Hit it.
Tight range break. All right, let's put this back in the closet and bring out the composite rating, which also has some short float in there. That one is killing the shorts, iRobot. A lot of short sellers still on that one, but I'm not going to chase that train. Again, we're going to look for some consolidation, some flags. Maybe this might fit the bill right here. The nice thing about this is it's got a 94 composite rating. It's extremely healthy. It makes money. It's also at the high end of its 52-week range. And for some reason, it has 33% short to float. Somebody's missing the boat here. Let's go to this high, and we'll call this a mother of a short squeeze at 101.81. 101.81. Possible short squeeze. Not going to chase, not going to chase. Yeah. That one could be doing something, but I'm going to pass. You didn't really see something compelling here. I already had 3 days expending its energy getting to highs. Nice reversal candle today, but I think that's probably going to be it. We'll do that. We already did that one, didn't we? ALRM? Nope. That was an example I did earlier. So this is going to be our last one. That's a nice looking sideways tightening range there. I'm going to grab the high candle. 65.59 is going to be our number. Tight range break with short float. And that's it. So while I copy these, remind you that I can share all 7 of these using the cloud code. I'm going to drop these into the chat window, and everybody can copy that cloud code link. If you don't know how to do it, there's good videos on that. Essentially, you just want to right-click on the cloud link that's coming through here and select Save Link. And then once you've saved the link, you can come and file Load from Cloud. It'll already be in here. And once you click Load, it's going to populate these price alerts into your exact window. So if they go off next week or this week, they will all go off at the same time. 3, 4, 5, 6, 7. All right. So I'm going to drop 7 price alerts while Scott gets ready to come in and tell you guys how to save on some stuff and a couple of announcements as well. All right, Scott will bring in the slide up for you.
Sounds good. Thank you. All right, so on the way out, a couple items. It is podcast season. The new season 3 has started, so there's new episodes up. Just search for Trade Ideas Podcast in whatever app you use for podcasts and add us as a subscription. You get the newest episode, then you can scroll through and look at the previous episodes. There's some there with guests, and those are really interesting to review. There's a great ebook that both Steve and Andy contributed chapters to. If you don't have it yet, get it. It's free. Just go to trade-ideas.com/ebook and put in your email address to get the download link. And it's got 5 strategies on how to succeed in a post-BTFD market. So don't let the rocky market get to you. Get those strategies. There's a discount code, Get Holly Ideas, all caps. That saves 15% off any subscriptions first month or first year. Those of you that are already standard subscribers can use this when you go to the homepage and log in the upper right and go to change your subscription. Just use the same code and you can save that same 15% off the first installment of your upgrade. Thank you, Steve. Thank you, Andy, for the conducting today's webinar. We're going to have the recording up later on tonight or tomorrow morning and send an email out to everyone that registered with a reminder about how to find it. Thanks, guys.
All right. See you next time.
Thanks, everybody. I'll see you Thursday.
Bye.